Hello, guys. Good morning, good afternoon, good evening, good day from wherever you're listening to. We've come your way once again. Kind courtesy just to trade stock brokerage company. Guys, today's topic is going to be very interesting, very insightful. I remember the last time when I came your way, we spoke about making profits on the stock market via dividends and then capital growth. Guess what? This time round, we are bringing your way speculation. Speculation as a way to make profit. So, we're going to be discussing the basic concept on how to make profit using speculation, how to speculate, what it means to speculate. So that I believe by the time we finish this, you would have a beautiful understanding on how the speculation works on the market. So, you can see there is this wonderful guy here with a lot of money going to buy a pile of gold. So you can see the gold here. He bought it on Monday and then he sold it on Wednesday and then he made a pile of money. So you can see, guys, the main idea of trading, the main idea of, visiting the stock market or visiting the market is to make money, is to invest and then make money. So, guys, stay tuned whilst we go through this. Trust me, it's going to be really, really insightful. And as we always do, at the end of the video, you can drop your comments and then you can drop your questions as well and then we will answer everything and then we will be good to go. All right, so guys, what is speculation? What is speculation? So in short term, in simple words, I would say speculation is short term buying and then selling of assets that have a significant risk of loss but a significant potential gain. Guys, I take that again. It says speculation, in my words, is short term buying and selling of assets that have a significant risk of loss but a significant potential gain. So, in other words, a lot of people love to use the word gambling. People say speculation is gambling, right? Good. So, as we always do, we're going to look out for the definition of speculation. So we're going to visit our lovely site, Investopedia. So guys, let's check out what Investopedia has for us. Okay, so Investopedia says, what is speculation by Alan Farley? It says, in the world of finance, speculation or speculative trading, it's the same, refers to the act of conducting a financial transaction that has a substantial risk of losing value. Take note, it says the financial transaction has a substantial risk of losing value, but also holds the expectation of a significant gain. Yes, this is where we love. It says it holds the expectation of a significant gain or other major value. So with speculation, the risk of loss is more than offset by the possibility of substantial gain or recompense, right? So we would like to stick to this, and let's also check what wiki has for us. All right, so let's check out what Wikipedia has for us. All right, so Wikipedia says speculation is the purchase of an asset, into bracket a commodity, goods, or real estate, with the hope that it will become more valuable in the near future, right? So in finance, speculation is also the practice of engaging in risky financial transactions. So guys, the key word here is risky financial transactions in the attempt to profit in the near future, right? Risky financial transactions, like we can see here, engaging in risky financial transactions in the attempt to make profit in the near future. Right, good. So, talking about speculation, you can speculate on different markets. Example, you can speculate on the stock market, you can speculate on the forex market, you can speculate with bonds, you can speculate with futures, you can speculate with a lot of financial commodities or financial assets, right? So to understand speculation proper, we are going to compare savings, investing, and then speculation so that we have an in-depth knowledge and an in-depth understanding of what exactly speculation is on the market, right? So let's get a picture here. All right, that will help us with the breaking down what speculation is, and then we get to understand it proper. So we can see here save. It says money market account, saving account, certificates of deposit, and then it has a slow growth. Guys, take note, it has a slow growth. That is for saving. What do we have here under invest? It says you can invest in stocks, real estate, bonds, etc. Like I said earlier, but then it has increased risk. It has increased risk. Yeah, so take note of this. It has increased risk. And then when we talk about speculating, it says speculating, day trading, currencies, and it has a very high risk. So you can see comparing saving and investing, you can see that it says what it has a very high risk, right? So in comparison, if you want to compare these, you should compare the type of assets that is being invested, and then you should compare the holding period and then the leverage used. Very soon we're going to talk about this also for you to understand clearly, but then have this at the back of your mind. In comparison, you need to talk about the type of asset, the holding period, and then the leverage used. So let's talk a little bit more about savings. What is savings? Savings is setting money aside to make a purchase in the future. For example, let's say you want to set part of your income or part of your salary or part of maybe a gift that has been given to you, you save it for a period of time and then you make a purchase. The most important thing here about saving is that it's safe, right? You don't want to you don't want the value of your savings to fluctuate. So that is why you can save it in a money market account, you can save it in a savings account or certificate of deposit. There are other ways to even save your money as well, right? So with this, it has a slow growth, like you can see there. And with this, some banks also pay a little interest, but then it's just a rate higher than inflation. It compensates inflation. But then your money is safe when it comes to the saving, right? Good. All right. So let's talk about investing. So basically, like we spoke about some time ago in our previous tutorial videos, this is higher than savings. Like you can see here, it's higher than savings. And then the basic idea of investing is investing your money to owning a share of a business and then expecting to receive higher returns later. That is, I mean, when it has gone up. You understand? So this is always higher than inflation, and the risk here you can see is increased as compared to that of savings, but not as speculation. You understand? So you can invest in stocks, invest in commodities, invest in financial assets, futures, bonds, like you have it. So you can often check our previous videos, and then you're going to understand better when it comes to the investment. Now about speculation. So the main thing here is speculation, where you can see speculator says very high risk. Let's take note of this, very high risk. So guys, in basic terms, what speculation means is growing your money more quickly. So if you compare speculation to savings and investment, your returns for speculation is quicker than that of investment and then savings, right? So speculation involves putting your money at risk. That is where initially I used the word gambling. So you put your money at risk, but getting high returns over a short period of time. So for example, you can talk about day trading, where you can open and close positions the same day. So day trading is a very good example of how to speculate, where stocks and trades are open and closed in periods of minutes, some even in hours, but then even some the same day. So you close and open and then you make high profits. You understand? That is if you're able to place good trades. So the thing about speculation is that the win can be big and the losing can also be big. So you should know how to go about it. You understand? So speculating, as I said, is to gamble your money. So the good one thing too is that speculation also can be done on leverage. Most of the times you can speculate on leverage. So basically, leverage simply means using borrowed money to invest in a currency. Maybe let's check. the definition of leverage so that you have a fair idea on what leverage is. Okay, so as you can see, guys, leverage, it says leverage results from using borrowed capital as a funding source when investing to expand the firm's asset base. So for leverage, as I was saying, you are using borrowed money to invest in a currency or stock or any security with the aim of trading larger positions, most of the times in currency pairs. You understand? So you can speculate on leverage where you borrow more money from the company and then place higher trades and then expect higher returns in a more quicker way, right? So for speculation, the main idea here is that you don't take into consideration the process the profit is made. No, speculators don't care about the process in which the profit is made, why and how the prices go up, etc. For example, in cryptocurrencies, people invest more likely into the idea of the technology. So for speculators, you don't care what really happens in the behind the scenes, how the profit is made, but then you are solely interested in the idea of the technology, going in for the big bull and then making good profit. So a speculator is less concerned with the fundamental values of a security. They are more, concentrated on the price movement. They are interested on the price movement at the market, on the market at that particular time. But then comparing to an investor, you realize that an investor is more prospective. So an investor will you put your money into the company who is developing some kind of wallet, some kind of blockchain. I'm comparing it with, I'm using cryptocurrency as an example. Right, I'm using cryptocurrency as an example where you, as the investor, will try to invest in the company that is developing the wallet, the blockchain, other products which will manufacture the cryptos. But then, as a speculator, you are going in directly for the product and then investing in that. You understand that? Good. So, when we talk about speculating too, maybe you can give an example where you can speculate using investing in estates, real estate properties. You understand? So let's use an example here. um, House A and then house B. So for example, you buy house A and then you let's say you stay in house A for, let's say, 5 years. You bought house A for, let's say, $20, and then you stay in house A for 5 years, and then later, after some time, you decide to move. So this is a form of an investment where you are investing in the building, then you stay there for some time, and then you move out. But then let's say if you want to speculate a real estate property for, so let's say property B, right? Property B is in bad shape, so you invest solely about, let's say, $2,000. Make sure that uh, property B becomes very beautiful, very attractive to buyers, and then right after your renovation, there and then you put it on sale to sell at the moment for someone to buy for you to make your profit. I hope you understand that, guys. Yes, so that is the basic idea of speculating. Speculating really deals with the time frame. So let's just get one or two definition, comparison differences between investment and then speculation, and then you see for yourself. So getting this picture, you can see that investment and then speculation, it says the time horizon. Investments are long-term saving for the future, but then with speculation, you can see here it's generally a short timeline of less than 1 year. Yes, guys, less than 1 year. It's you want it fast as it could be. You take the risk and then you go for it. You understand? And then the level of risk you can see here for investments, it's normally moderate, but then for speculation, because of the time frame, it's really high. And then the investor's attitude is aggressive. A speculator's attitude is aggressive. A speculator is always aggressive, always on the go to make quick profit for him or herself. You understand? So the speculation is quick. You understand? And then the investor, for investment, The investor is cautious and then conservative. And then the decision criteria you can see here says based on fundamental and basic factors. And then for speculation is based on technical charts. They are always on the market, market psychology and individual opinion. You can see that. And then, for example, as I said earlier, stock market, bonds, mutual funds, and then for speculation, you can talk about options, foreign currencies, cryptocurrencies, and other stuff like that. Let's just check another comparison again, and let's see so that we understand it more. So you can see, so basis for comparison, the meaning we said earlier, investment is a purchase of an asset with the hope of getting returns. And then for speculation is the act of conducting a risky financial in the hope of substantial profit. So here we can add very quickly. The time frame is very short as compared to investment. And then the basis of this decision is fundamental factors, that is performance of the company. They are interested in the company producing the product, but with speculations, they are interested in the product that has been produced. You see, so they depend on hearsay, technical charts, and market psychology, like we read earlier. And then you can see here longer term for speculation, you can see short term. And then the risk is always high, guys. It's always high for speculation. And if you meet a speculator who is making good profit, whoa, they are really making good profit for themselves. You understand? They take the bull by its horn and then they make the profits. Don't forget, if you are losing, you lose too. All right. So the intent to profit is change in value, and then here change in prices. So they depend solely on the price of the instrument that has been, of the commodity or whatever has been produced by the company. And then the expected rate of return, you can see here, modest rate of return, and then for speculation, high rate of return. So yes, guys, that is it for speculation. That is the basic idea on how to speculate. So just a recap, like we said, speculation is short-term buying and selling of assets that have a significant risk of loss, but also a significant potential gain. So in other words, we can say you are gambling with your money, just to make it understandable. So you can speculate, and then you speculate at high risk, and then within a short period of time you get your money. And then that is if you put you I mean if you place good trades, you understand. And we also made mention of the fact that you can speculate on leverage, where you can borrow from the company and then place higher trades and higher cost trades, and then make higher profits for yourself. And then we spoke about the differences between the speculation, investing, and then savings, right? Good. So yes, so guys, that is it, and I'll just love to end with this. So if you go to on our website just to trade, you can see some good leverages there. When you want to once you're ready to open an account, and then try to speculate with some good leverages, you can see it for yourself. So we have the instruments here. So if you go to stocks, yeah, we have some good leverages here that you can use to speculate. So buy more borrowed money, like we said earlier. So cryptos also have, uh, so if you go to cryptos, also have some good leverages here as compared to other brokers. Yes, so guys, yes, so that is it for now. I hope you enjoyed the tutorial. So we'll come your way once again with other ways to make profit on the stock market. So if you have any questions, you can drop them the comment section below, and we'll be glad to answer everything. And please do like the video. So we'll come your way once again. Stay blessed. Bye bye.